Welcome back to Real Migos. No sunglasses today. I figured out how to turn the light down a little bit if I don't get a massive headache from the bright lights. Ian, what's up, man? Are you in 60K or whatever it is again?
Yeah, I'm in 8K. Yeah.
8K, you're looking
what it
better.
is.
Nice.
How are you?
Aaron's here. Afro-capitalist, what's up? Oh, what? Oh, here, I gotta share this screen first. Now I can do that. All right, Afro-capitalist, what is up? What is love got to do with it? Are we singing today? Ian's in 56K modem.
Never. Man,
Karen's
I
here.
swear I pay more for less. That's what's happening with my internet.
Yeah. All right. So today, here's what's going to happen today. I have a special guest coming on at 2:30. Okay. So stay tuned for 2:30. Don't take off. 2:30, we have a gentleman coming on. Property taxes in the Austin area, they went down. They did not go down significantly. We are seeing property taxes still go up this year. So I have a gentleman coming on to talk about property taxes, what's going on with them, how you can go through and protest your property taxes this year, which I recommend. Ian, how much did yours go up? Was it like 80%?
It depends on which property, but actually some properties have been going down, which is kind of interesting. And I've had that same report with a lot of different clients too. And so then the question becomes, well, do I protest still?
Yes.
So I get a lot of that.
Yeah. It's interesting. Our property still went up in value, even though the values in the area are still $100,000 more than what they would actually sell for. So he's coming on at 2:30. So we'll bring him in swiftly. We want to talk about the big news that no one is talking about. Ian, dude, I don't know what's going on in the world. I guess we have too many things to actually talk about. But if you just go in and go into good old Google, and you go ask about Biden admin proposed capital gains tax. No one is reporting on this. Yahoo it's funny as people get mad sometimes. They're like, well, you're reporting on some like crazy right-wing site. Look at the people that are actually reporting on this. It's Yahoo Finance wrote one article with Grant Cardone here, which we'll read through. Newsweek, which if you're not familiar, Newsweek reached out last week for a comment on a video about neighborhoods that were abandoned, and they misquoted me. So I had to remove a video because I didn't want people to get hurt in this neighborhood. So whatever you do, the neighborhood that I just posted the video, don't go into the neighborhood. I appreciate you didn't, because I don't want you to get hurt. It's not safe. There's a lot of stuff sticking out, glass everywhere. It's not safe. Don't go do it. So they didn't want to put that in the article. They just basically said, oh, Realtor Jeremy Knight declines to say where this neighborhood is. Well, they forgot to mention where I said, hey, I have a full video coming out. And also, I don't want people going there and get hurt. So Newsmax, thank you for writing an article about me. Yet, thank you for for missing the big point there. But anyway, Forbes wrote kind of like a glowing article on this, like all the caveats and asterisks. And I read through this and I was like, wait, this tries to make it sound good. There's a lot of people that are not happy about this, but it is really, really hard to find anyone with a major publication actually writing on this news. Does that shock you, Ian?
Not at all. But also there have been many situations, kind of like what you talked about, or what you dealt with Newsweek, where you get whatever is differing opinion or something that's what do you call it? Like sensationalized.
Yeah.
You always get something that's sensationalized. And so that this with Forbes, when do you ever hear anybody talk about the good things about taxes? Right. So
right.
It's interesting. I read through the same article after we had talked about it, and there's a lot to say.
Well, what's interesting is, we'll go through it real quick, and I want to go through like the high level stuff. This is like the only right-wing-ish publication that I saw on YouTube that really said, anything about this that was a bigger publication. And I don't mean like, if I pull up Fox News, people get up mad that I pull up Fox News, right? Okay, fine. CNBC was the only one. Here's a Democrat congresswoman, I think, and then another gentleman on here. So I'll share this, and then we can listen to this and what happens, what she says. But let's go through what the capital gains tax stuff is. What did you read about it, Ian?
Well, so the first thing I want to say is, I noticed when you pulled it up, you to El Google, right? Have you ever gone to something like DuckDuckGo or some of these other sites?
I went to Bing immediately, and no other big publications wrote anything about it.
Okay. So I've got some on Smartass that CNBC has written it, CNET, some other tax entities and news publications, MSN, Kiplinger. So there are some other places that have done it, but it doesn't show up the same way on Google, right? So that was kind of interesting.
Well,
Go ahead. I was going to say, as far as the Forbes article specifically, looking through, you're sharing the same thing that I've got up. So
this is a new article they wrote. So this wasn't the initial one they wrote.
Got it. Okay. So because they're talking about the capital gains, but really there are all these other elements that are going to impact so many people at all different income levels. That's where it's like, okay, so they're gonna hit you with the capital gains, and then investors, that's gonna hit investors. But what about all the other stuff that they're sliding in here? So this is a much better article that goes through how it's going to impact Americans and Austinites.
Well, and I think that's the problem too, is that when I've read through a lot of these, it all talks about how it's people making over $400,000 a year, and or people that are making over $1 million a year, that where his proposed things will hit. But the bottom line, in fact, the video I'll show here in a minute, they go into detail about how this is going to affect everyone in every price category. So let's read through this real briefly, Ian, and we'll get your comments on this. So basically, this is what the Forbes article wrote, that Biden's budget is going to be a $7.3 trillion budget next year. And one of the biggest things that I read, even on the article, is nobody talks about cuts. Nobody talks about cutting spending. And so that's where a lot of people are like, wait, we're raising taxes again, but not cutting spending. We're sending taxes to our tax dollars around the world. And I've seen some, interesting videos recently about how much money we're sending to the Taliban on a weekly basis. I don't know how the validity of it, so I don't want to go through it, but it was interesting. So
I do want to add this in. I've had a couple people reach out and talk about directly to us in this show, talking about how we need to stay away from politics and conversations. And the thing that I want to share is that we are not politicians. We are real estate agents, and things like taxes are a direct result of how the politicians are spending and the policies that they put in place. I do not want to sit and talk about politics, but this will impact tax rates. This will impact your paycheck. This will impact our people able to buy homes. So that's why we're having this discussion. And I just wanted to call that out.
Okay. So we gotta hurry up because we got 2:30. We got him jumping on, but it's going to take the ordinary federal tax rate from 37 to 39.6%. So 2.6% increase on people making over $400,000 a year. That's a lot. The other thing that it doesn't really talk about besides the 2.6% there was it would increase Medicare from 3.8 to 5% on people making over $400,000 a year. Okay, that's another big issue.
Yep.
Medicare is one of those things that is a touchy subject, so I don't want to go into very much. But that's another 1.2% increase. Then you have the general increase here. Capital gains, though. So if you sell, so one thing they didn't really touch on is, Ian, if you go sell a home that you would make, even if you were a mom and pop, right? So you bought a home, Ian, you make was at $125 per couple is non-taxed, so $250,000. Well, they've changed that. So once you go above that, you're looking at almost a 46%.
It's almost double.
In fact, it's close to 60% depending on the state you're in. So on top of that, you have $1 million. If you make $1 million a year, they're going to take your tax rate to 39, almost 40%. And then depending on the state you're in, it's going to be over 50%. So think about that. I know people like, oh, tax people that make $1 million a year. The people that make $1 million a year, typically, not all, but some are small business owners. And in a lot of the articles I've read, the Fox News ones, the other ones, talks about how this is really going to hurt small business owners. And think about a time when small business owners are already kind of hurt with inflation. And now you're going to hit them with more taxes. Think about that. If you make $1 million a year, 40% at least is going back to the government. And then you have, depending on the state, another, you're in California, now you're at 50, almost 60%, right? 59%. So you're only making $400,000. And that's not including the fact that you have to pay for workers, pay for people. I know as a real estate agent, everybody hates real estate agents, yet I have an assistant I pay a lot of money to. I have a videographer I pay a lot of money to. I have a TC I pay a lot of money to. My brokerage I spend money to or send money to. So all of these places I have to send money to, and then I pay 40% in taxes as it is. So this is going to hurt. But then if you're an investor and you're going to sell properties or have capital gains, even if they're even taxing the unrealized capital gains, which is mind-boggling to me.
That's mind-boggling.
If you own a property, Ian, if you own a property and you have any sort of wealth, they're going to tax you just for having the property.
Yeah. That's.
I mean,
that is one of the worst decisions that I have heard in the recent future. And obviously this came about as a result of crypto, but it's so interesting when you have this thing that you're buying that's supposed to help you grow and build and save for retirement. And the next thing you know, you're getting taxed. You're not able to receive that benefit. And then when you go to sell it because it's not working out like you thought, or because it's time for you to use it, you're getting hit again.
Yeah. Let me make sure I share this correct. So going through the articles there, what else did you want to talk about before we put on this little video?
So when you talked about the 400,000 and up, I think that's important because you have a lot of people that relocate to Texas for a number of reasons, but we also have almost a disproportionate amount of people that are doing very well, especially single men that are making that kind of income, right? So that's important. So that's going to hit that population. I'm really curious to see the Medicare thing. The reason why that's important is because you have so many people that are on a fixed income. And think about how many people have been in the Austin area, stayed here, and they're of the retirement age, right? Like we have whole communities dedicated to it, like Sun City and Vizcaya and stuff like that. What is that going to do to their world? So it really is just hitting everybody across the board, every gamut.
Oh, now it's going to add. Come on. Sorry. Keep going.
No, you're good.
It's so funny it's so funny that as soon as I pull up the YouTube video, because I'm trying to make sure I play the audio on this. As soon as I pull up the YouTube video, it automatically started an Ownwell commercial.
Nice.
There you go. Oh, what happened? Where is the audio?
Yeah, I'm not hearing anything.
Okay, perfect. All right, so I'm gonna share this. Tell me if you can't hear it.
And there's no chance
it's really low.
The Trump tax law is going to expire. They're going to extend it.
You just silenced. I need you to turn it back on. You're still muted, Jeremy.
All right, let me try. Sorry, this always is a cluster when I try to share tabs. Mute audio. No, should be going. All right. Technology. All right, let me know if you can hear it.
You know, the president's budget is not a budget document. It's a political document. He wants to make the point that he is advocating for higher taxes on billionaires. He did that in this document, but there is no chance that that's going to pass but it's full employment for lobbyists, let me tell you.
Yeah.
People want to scare people. It's just not going to happen.
I want to go back to you.
I realized what I did wrong there. Hold on. My bad. Sure.
The screen dropped when you did it too. So the screen share. What are our comments looking like?
All right,
Mainstream media.
Legislative. So you said, and the president has said, I'm going to let it expire for people making, over 400,000, but it's a rule. It's a piece of legislation. Can you let parts of it expire and not others? Because the president has said twice and also on Twitter in the last week that he's going to let the whole thing expire and never mention income limits.
Well, let me tell you that so much of what's in there, especially as it relates to the transition from what we call Schedule A itemized deductions to basically standard deductions, has really benefited a lot of lower income people. And then think about the states that Democrats represent. There are states that have been severely disadvantaged from the SALT deduction, and that is going to be a hard push against someone like Chuck Schumer. And so I think you're going to see some negotiation. You're going to see people coming in with, a modified plan, whether it's offsetting some of this with the child tax credit. The negotiations will begin because it is not good politics for Democrats to let the entire tax law expire and not.
So that's the funny thing is that, we're in an election year. So a lot of people that are, so in order for this to pass, obviously it has to go through the House, Senate, and then obviously Biden approve it.
Mm-hmm.
But this is what his tax plan is. This is his plan. And so what she's saying is basically hey, there are probably going to be some negotiations to this, but there's really no benefit right now to let the Trump tax cuts expire because currently, I don't know if people understand what the SALT tax is, but the SALT tax is basically you can only deduct a certain amount the state you live in. So in Texas, if your property taxes are, $20,000 a year, you can only really deduct $10,000 towards capital, towards the federal taxes, right? You can't use that as a tax deduction, as a $20,000 tax deduction for the federal government. What are your thoughts on the fact that really a lot of what they're saying here is that this is just theater for Joe Biden and his base?
I do think that it's theater, and I think it's theater because we're in an election year. And I think that it's really interesting because you have this dichotomy of left and right, like you always do in an election year. But the real question is, who has to pay more money to the government? And then where is the money going from the government? And we have, I see Ari Watchman said, I'm interested to see if these increases will change or lead to sales from investors. That's the kind of thing that I don't think the politicians are going to think about right now, right? I don't know that that's in their world. I think it's how do we get votes?
Right.
Yeah, just how do we get votes? It's really frustrating.
Well, the question, the Ari Watchman's question is a solid question.
It is that is the question. And not just investors. This is anybody. If your monthly payments and your taxes or the money that you expect to make or save ends up leaving you, what changes impact your life? It hits everybody at a fundamental level.
Right. And this goes to Janet's question or statement here. Aaron, yesterday I heard the inflation job numbers Fed won't cut. Distorted stats, of course, in real life, inflation much higher. And does one person with side hustle get counted as having two jobs? I think that's the tough thing is we're in a time where people are having okay, think about it. I know making $400,000 sounds like a lot of money, and it is. Making $400,000 a year is great. Again, if you are making $400,000 a year, they're planning to tax you much higher. The benefit is making $399, right, versus $401. $401, you're taxed at $4. With this, now you're going to even pay even more, especially if you're making $400,000 a year and you're a private, business or a small business. You're paying. So think about that. $400,000 50% of it's 2. So you're looking at $175,000 in taxes. And then you got to pay, and if you're a small business owner, you got to pay healthcare on your own. Your business isn't paying that. So we're talking healthcare is $2,000 to $3,000 a year right now. So healthcare on top of it. So inflation really is killing a lot. Like $400,000 isn't as much as it used to be because of inflation. And this is why people get mad at real estate agents, and they're like, hey, people can't afford these $500,000 homes anymore because interest rates are so high. Yeah, gas is high, everything's high,
Everything's high,
and everything's not getting better. Now, look, people are like, "Oh, this is." I'm not telling you who to vote for. I'm just saying these are the facts, right? You do what you got to do. I want to play this last little clip here with what he says real quick, Ian.
Yes, and you would still have enormous federal deficits facing it. So I want to begin by just agreeing.
Save hundreds of billions a year. Taxes. We never talk about fixing the problems. If you just fixed the waste, fraud, and abuse in the government, you could save hundreds of billions a year.
Yes, and you would still have enormous federal deficits facing it. So I want to begin by just agreeing with the senator that this is a political document, and if these proposals are in there precisely because they will not pass the Congress, and they has the luxury of simply using them on the campaign trail. On the substance, first, you do have to deal with the spending side. The threshold decision Congress makes is to spend the money. You then figure out how to pay for it, and it has for years been unwilling to control the spending. The key to spending is not just the waste, fraud, and abuse, it's the large mandatory so-called entitlement programs, and the president and candidate Trump have both taken them off the table. That's a disservice to this country. If you go to the tax policy,
Notice, Ian, he said both Trump and Biden have taken that off the table. So again, for people that think that I'm telling you which way to vote, definitely not. I mean, I'm giving you all the info. But what do you think about that so far, those statements they made?
So it's so interesting because it's very much the same type of thing that happened when President Obama was announcing Obamacare. And what he brought to the table is not what ended up passing. There was a lot of upset and heartache about some things that were said. And then, negotiation back and forth, just like this woman's saying. And then it ended up being a little more reasonable, at least in theory, as it was finally passed by the House and the Senate.
Yeah. What I always find interesting is when people, it's like, how do you get something passed? What you really want is you overdo it, and then
it's a negotiation
on right. So if I say, oh, I want to increase to 55% capital gains tax for selling your home, or if you're the problem is, as an investor, if you're going to sell a home, you're hit with capital gains tax, long or short form, or short. And so those are high. But, if you want to get something passed, then you go, okay, 55, okay, we'll be okay with 48%.
Yes.
And then you're like, okay, good thing it wasn't 55%. Yep. And then you're still paying more in taxes.
Yeah.
And even here, he's saying
everyone feels like they win in that circumstance. It's like, wait, what? What just happened? I
want to read this question in a second, but I also find it kind of telling that if as we go on in this clip, if we were let it play out, he said, if you were to tax, and I watched this clip, you were to tax every billionaire to 100% and take all of their wealth, it would only allow the government to run for 9 months. So taxing billionaires wasn't necessarily the answer. And that's where a lot of these taxes are, hey, we're taxing the rich, but the trickle down effect is that if I'm a business owner, I made this a little bit earlier. If I'm a business owner and I'm taxed, and it taxed to a point I can't actually afford you anymore, then I'm not going to pay for you, and then you lose your job.
I was going to say that's the unfortunate byproduct of a lot of these political discussions, because there are so many people that may or may not pay close attention to this. And I feel like that because as I was growing up, I'm like, I don't want to deal with it. I don't want to deal with it. But think about it. It might not be the one billionaire individual, but that billionaire individual is making decisions for a corporation or has a lot of hiring power, right? So if that person's impacted, it's going to impact down the line and have such a massive ripple effect. And I'm not saying that it should or shouldn't happen. I'm saying the ripple effect is something that I don't think many people understand how that impact plays out for just our local economy and our national economy.
I mean, that's what I'm worried about. And I think that's what he said, you know, as we continue to go on. So here we go. RE Watchman says, investors, I report on San Antonio and AH4R sold 638, bought 0 in Texas in 2023. Price drops while property taxes went up 30%. I think that's the problem is, you know, especially with what happened here in Austin. You know, there was a girl, and I'm going to make a comment video on this girl. Somebody sent to me as a TikTok video of this girl saying how bad the Austin market was. And I would say 70% of what she said was fairly darn accurate. You know, a little bit was a little hyperbole, but I'll do a whole breakdown of her TikTok video because it's going viral. I think she's right. I mean, I would say at least 70% of what she said is happening in Austin is right. And her bigger picture was that you have all these people that moved from all these other states, ran up the bills on prices of homes, and now they're like, oh, it's not what I wanted. Now I'm leaving. Yep. And I'm like, girl, why didn't you tell them to watch my YouTube channel? I've been pretty honest with what's actually happening in Austin. So, America.
But the thing is, like, it's one thing for I'll call us smaller investors to do that. It's a whole other thing when large corporations see the writing on the wall and they're copying what the independent investors are doing, right? So when you have your Zillows and your Opendoors, no offense, Zillow, Opendoor, if you're watching, but when you have those same companies that are doing that, that's when it really starts to have just a massive impact to us.
Yeah.
And yes, like Rewatchman says, Real Estate Watchman, American homes for rent. That seems to be the end goal or end game. Not necessarily the goal, but that seems to be where so many things are going.
Answering to this question, this is a fair question. So if you make $399 versus $400, you'll be taxed more on the entire $400. That's basically how it reads. Yeah. I thought federal taxes were staggered. So if your first 10K is taxed at 2%, 30K 3%, you are not taxed on a flat rate. No, you're not taxed on a flat rate. I don't think. All right, Tyler's on the back. So any last questions or any last remarks on the capital gains tax? I'm interested to see if it goes forward. I really am not, after reading more and finding out that it was a little more theater, I'm glad it's a little more theater. Unfortunately, I think we still will see part of the, I mean, you tell me, Ian, I think we'll still will see part of these things go into effect. Some of the Trump tax cuts will stay. Some of them probably won't. I mean, what are your thoughts?
So I do think that it's just a balancing act. And what'll happen is, let's say there were 6 or 7 proposed changes for the specifically related to taxes. We're going to have half of them pass or a handful of them pass. So in every case, something will get hit. And we just have to keep our eyes out for it and see who that affects. But I don't think the theater will cease until we're getting closer to an actual election anyway. So
yeah, awesome, man. Thank you. All right, we're gonna switch gears here. Sorry for switching gears. If you have comments and you want to chat, hear more from us on capital gains taxes and go into a little more detail, I can make a full video on it. So if you want that, drop a comment below. We're gonna switch gears and talk about property taxes in Austin, specifically Texas as well. I have Tyler. We are adding him on. Tyler, good to see you, man.
Hey guys, Jeremy. Great to be here. Thanks for having me.
Awesome, man. Hey, so tell us a little bit. So you run a company that does property tax protests. Just give us a quick summary of what y'all do. You have a little, besides property protests, you do a little bit more than that, so people can sign up for on that, and we'll get a link that I'll put here in the comment section here in a minute. Just give us a quick overview of what you do, and then I want to get into the tax stuff.
Yeah. So very briefly, Abode is a financial manager for homeowners. So all of the financial things that come with owning a home, I call them non-mortgage costs, we are helping homeowners manage. This is very true to my heart because when I bought my home, I tell people I've made $10,000 of mistakes in the last 3 years since owning my home. And these are things like not understanding the appeal process for property taxes, which we're about to get into, over insuring my home, double paying on utility costs, not knowing how PMI worked. There's all of these very complex financial things that come with owning a home. And owning a home is great, but there's not really somebody there to coach you and teach you how these things work. And I think even if you do have the know-how, there's a lot of friction to optimizing these financial costs. So that's what Abode is doing. We're basically just taking all of that expertise and labor off of homeowners' plates to help them save as much money as possible on these costs, and hopefully in the process make homeownership a little bit more affordable.
Tyler, I have a really strange question. Does that mean you're acting almost like a property manager for the homeowner in like an educational aspect? Like we're helping you run your home as a business. That's
exactly it. And I think the thing I want to touch on most is that we're not just educating you. I mean, that's part of it. We're telling you, hey, here's what you need to know about these financial elements of owning a home. We're also doing the work for you, right? We tell people it's less than 60 seconds of work for us to save you thousands of dollars on your home. And I think that's important because the consumer today is very distracted, is very busy. And then even if they weren't, I don't know if they would want to be spending their time digging into the weeds of these things.
Mm-hmm.
I think that's the biggest challenge, especially when it comes to the property tax protest. And what is it? It's like it's only 40% of people actually protest their taxes every year because it is made to be a not easy process to understand. And then when it comes to paying for a company to do it, you're like, is the juice worth the squeeze? Just like Ian asked a minute ago. A minute ago, what did you say, Ian? That you said something about having to pay for it or having to know about it. I totally just lost my train of thought on it. I'm looking at two screens here.
Yeah, it's all good. It's the rebate problem, right?
Yeah.
Like you have all these things that you buy, you go to the store and they're like, oh, you can get another, $50 off or 10% off if you just fill out this form or send in the rebate receipt, and nobody does it. And they bank on that.
Yeah.
That's it.
So, hey, Tyler, by the way, real quick, did you send me a link? I didn't see it in my email.
A link to our website?
Yeah, you said you were building a page for me that I could share with our audience.
Oh, I can get that to you right after. I have the link to our website's ownabode.com, OWN, abode.com. Okay. I will get you a specific link to share with.
Okay, right, because we had talked about with the property protest that if you use your company and go through your company, and you do the protest, because a lot of times we've talked about Five Stone, Ownwell, all these other ones. So what happens when you do use a company to do a property protest, they don't charge you anything up front. I think that may be wrong now.
There are a couple.
Five Stone will now actually charge you an upfront fee.
Yeah,
I think. But what'll happen is, if let's say you save somebody $1,000 on their protest, right? So you save them $1,000, y'all charge, what is it, $250? Is 25%?
Yeah, that's it, and that's the lowest fee in the state of Texas. And there's no upfront fee. There are companies out there that do charge an admin fee up front on top of the percentage that they're taking, and typically those percentages are in the 40 to 50% range.
Yeah, I know. I've used Five Stone in the past. What's the other one? Texas ProTax.
Yeah.
I haven't been thrilled with any of them, so I'm definitely curious how your product works and what you get with that. But let's go through the appeals process. So I think the problem is for me when I open up my statement, right, and it says last year your home's value was $499,000. Now it's $517,000. Yet we all know that property values, depending on where you are, Austin is now year over year 2%. The MSA is flat. What happens to people when they do that? How do they actually? Do you know how they actually come up and go, okay, we're increasing you another 15%, whatever it is?
Yeah, so the Texas Constitution basically says that each county is responsible for assessing and collecting property taxes. So that means there's over 250 counties in the state of Texas, and it's their responsibility to set the assessed value of your home every year as of January 1st of that taxable year. And what they'll do is they call it mass appraisal technique. And so they're basically, to oversimplify, they're basically just saying, in this neighborhood, we think the average home price appreciation or depreciation, but most of the time appreciation, is, let's say, 5%. And they'll say, okay, everybody in that neighborhood, their home is going to have increased 5% relative to where their assessed value for the prior year was. And we know that that's not how homes are valued, right? There's a lot more idiosyncratic behavior and characteristics to each home, but it's a pretty monumental task for the county to do that for hundreds of thousands of homes every year. That's why that Texas also allows and gives the right for every homeowner to then go and appeal the assessed value of their home. And what you're really doing is basically saying, hey, I don't agree with this, but I also just want you to take a closer look at this because I know that you took kind of more of a broad swath approach. Now, by appealing your property taxes, which is very low risk, if any risk to doing so, which we can talk about, you're basically just saying, I want you to take a deeper look into my home, i.e. value the home the way we know homes are supposed to be valued.
You know, can I just say one thing that's very, very, very important? Jeremy and I have been doing this Real Migos podcast for a very long time. Never have I heard any guest cite the Texas Constitution. But that's actually a really big deal because it shows how much of your homework that you've actually done and how much you understand that this is a rules-based system and you're building your product and your business off of these rules. It's very, very cool. Applauding you for that. Thank you.
Yeah, of course. I appreciate it.
And different from people coming from other states that may not understand this in any way.
Yeah, Texas is very unique. I mean, there's also the fact that Texas is a non-disclosure state. So the sale prices of homes aren't necessarily public even to the county. And so that's another reason why they might miss things.
Unless there's a whoops. We've had some whoopses.
Yeah, that's true.
So one thing you said is pretty interesting, and this is where I face is, so when they're very loose about how they say they come up with the value of your house, right? So I go back to this example because it's very relevant. So I have a property that literally, if I listed it today, would not sell over $425,000. They have my taxes on the house assessed at $517,000. And when I break down the comps, they're using comps from a neighborhood that has a gated community, that has a pool, has a pretty high HOA, and it's a lock and leave community. And they're saying your community is the same valuation as that community. Well, if I'm getting a neighborhood with a pool, I'm probably going to pay a little bit more than a neighborhood without a pool. If I'm plus, the schools are different. So this is where it becomes really challenging for us. Like if you were to reach out to us, because this is what happens with my past clients, they say, hey, Jeremy, give me some comps. I'll give you comps. And then what will happen is the tax appraiser goes, well, these don't fall in our purview of our metrics. And you're like, why? Well, they don't. And so what happens is typically the process goes is you get your little tax thing in the mail. You can go online to the county website, or you can actually go and fill out the little doohickey and send it in. And then you get a informal hearing, which you can then go do online. You can do as a phone call. You can schedule it online, or you can go in person for the informal. And then you'll basically go, here's all my comps. Here's why I think you're wrong. And they're going to say, okay, we'll drop it 5%. And you're like, yeah, but that's still way over what my home is worth. Okay, well, we'll do 6%. And you're like, wait, why am I negotiating with you? Wait, how did this turn into a negotiation? I'm giving you the comps. It should be this. Well, we're not going to do that. Here's what we're going to offer you. If you don't like it, go to the formal hearing. So what happens, Ian? I go to the formal hearing and it's 3 people and a tax appraiser. And I go, here's all my comps. And the 3 people go, yeah, that's right. Yeah, your home should be worth $75,000 less. And the tax person goes, nope, no, that doesn't fall in our purview. We already told them that in the other hearing. So this jamoke thinks he's smart. He's not smart. And I go, well, I'm a real estate agent. Here's the comps. Which valuation do you want? How do you want the valuation? And they go, no. And then I go, well, they say no. So no, we're not going to do anything for you, right? And then you're sitting there going, why did they waste all my time? So this is why I've chosen to go work with other companies. So if I get this little notice in the mail, Tyler, and I go, all right, I can go to Ownwell, Five Stone, I can go to all of the other companies, and then I have a boat over here. Tyler's telling me he's going to charge 25% of what he saves me nothing up front. What is a process for someone getting in touch with you and then going through the process?
It's very easy, intentionally so. You go onto our website, ownabode.com, you enter in your address, we tell you how much we pull in a bunch of data, we tell you how much we believe we can save you on not just property taxes, but also insurance, energy costs, and the like. And then there's about 3 more screens where you basically confirm that you are the owner of the home, and then agree to our terms and conditions. So it does take less than 60 seconds. And essentially all you're really doing is signing over authorization for us to go and appeal your taxes for you. And we're going to keep you in the loop, but the sign up is very easy.
And so go ahead. Yeah.
Well, I think we're staying on this topic, so you ask yours. I'll come back.
So yeah, I've got a couple questions, but so for you on the back end, what's the process for you? You intake my information, and then, generally what's the process on the back end? Because we've asked all of the companies I've named to come on our channel, and 0 have even said they'd be willing to come talk. So on the back end, what's the process for y'all?
That's curious. Abode is a little bit different from the hundreds of other property tax companies in Texas. One reason is because we're not just doing property taxes, we're doing a lot of the financial cost of homeownership. But more specific to property taxes, the way that we're operating is by working with some of the top performing, we have partners that are the top performing law firms and boutique property tax consultants in the state. And so we've looked at historical performance and we've handpicked the ones that we want to partner with. The benefit to them is that we're bringing them business and making the process incredibly easy for them because we're already doing a bunch of the work on the data front initially. The benefit to the user or our customer is that our partners are doubly as effective, two times more effective than the average partner. And the reason for that is because a lot of these high volume shops that you've named have hundreds of thousands of cases a year. And so they're not necessarily taking the most care and attention to each of those. Whereas the partners that we're working with are these smaller, lower volume shops that can take more care with them. So that's kind of one of the key differences. But what they're doing, what our partners are doing is very similar to what these other high volume shops are doing. I think they're just a little bit more effective. The data would back that as well.
So you're almost acting like a tax consultant brokerage?
A little bit. I mean, Jeremy led with it. There's, I think, in between 60 and 80% of Texas homeowners don't appeal their taxes. So a lot of the work is really just educating the customer and highlighting and like pulling in the data. And what it allows for Abode and my company is that we can remain pretty nimble by not having to get super deep into the operations and hire a bunch of tax consultants because we're kind of outsourcing that work. So it's very symbiotic. Us, our partners, and customer works really well.
I love it. Very basic question, but one that so many people ask every year. If their valuation came back lower, should they still protest?
100%. 2 reasons. Because home values have depreciated, especially in Austin over the last 18 to 24 months. So you might even argue for a lower reduction. But the more important reason is that there is no risk to appealing your taxes, right? Especially if you can just outsource it to a company like Abode in less than 60 seconds, because you're only paying if we actually save you money on taxes. And there's no risk of your home increasing in value if you are to protest it.
What about, so one thing I've seen in the news happen to people is that they try to protest on their own and end up having, and this is, I think, what maybe some people are afraid of, have it go the other way, that the taxes end up being higher.
Yeah.
I mean, that's very rare. And I think the cases where that does happen is if like I've added square footage to my home. So it's a defining characteristic and then the county didn't know about that added square footage, and then you're kind of highlighting that they do. Otherwise, it's borderline unlawful for them to increase the value of your home. So it very rarely happens. So the few people that have brought that up are probably it's like 1 in 10,000 does that happen.
Yeah, I've seen those stories, especially. I mean, maybe they highlight those stories so people, don't protest their valuation. But I think the biggest problem I see most people do is they don't know how to do it right. So they buy a home, the real estate agent says, "Oh yeah, protest your taxes." Okay, what does that mean, right? How does that happen? And then you have a lot of agents out that have created decent videos taking you through the process. On my website, we'll add your link on my website when you shoot it over. But we actually have a full page dedicated to protesting your property valuation on my website. What's interesting though is I think almost every property between Hayes and Travis County have gone up in a time when valuations have gone down, or what I could sell my homes has gone down. The tough thing is one of a friend of mine that I know added a pool, so that could have added value to the. So does adding a pool add value to your property and your property taxes?
Yeah, I mean, those are some of the things where I guess in theory it could. Those defining characteristics that if the county didn't pick up on them through some sort of permit or something like that, and you bring it to their attention, then they might be like, okay, your home is now improved relative to where we thought it was, so your tax increase. But again, outside of those cases, there's almost no risk that your property taxes, your assessed value increases.
Solar.
Yeah.
I want to ask about that one specifically because I think it's different than a pool.
Go ahead.
And specifically a solar roof.
Ooh, good one.
If you add a solar roof to your home, does that increase the value of your home?
Yes.
I'm going to be honest. I don't have a great answer for that one.
I don't think anybody does. I don't think the market does.
The question to you as realtors, like, does that increase the value of a home from a market price perspective? Because one thing to make clear to your audience is like the assessed value of your home really has no bearing on the market value of your home. So even if you lower the assessed value, it's not saying that you're going to end up selling your home for less. They're completely disconnected.
Right. But it still comes back to, is it worth it from a savings perspective for some people, long-term cost savings, but also if they end up in a situation or a circumstance where they end up having to sell the home, are they able to do that? So at some point, there's a convergence between the two values.
Yeah,
there may be a convergence.
I mean, hopefully, right? I mean, we've also been in a market where prices have pretty much whipsawed over the last 4 or 5 years. So we're living in interesting times, which makes there's more room for error, especially when you're valuing valuing homes the way the counties do. But I think even in a normal market where they do start to converge, there's always going to be potential for you to lower that value a little bit because you're not looking at it as deeply as you might want to.
I like what you said earlier about being nimble. I think that's what needs to happen in the moment, right? Because things are shifting so much and we have to stay on it. So I love that you said that your company is intentionally built to be nimble for that reason.
Right. Yep.
Here's a good question. Flo Rida, thank you. This is actually a great question. I love it. Protesting property taxes, basically telling the county what your home is worth. Telling your home is worth less. Does that affect real estate market if hypothetically protested effectively? So virtually what he's saying is, if I protest my valuation and my taxes show up, let's say I have $1 million home, but my taxes show up as a valuation of $800,000, does that negatively impact the sale of the home?
No, I mean, again, this is where the fact that Texas is a non-disclosure state actually helps homeowners, but they're two very disconnected values. And I think you guys know more than anybody, nobody's referencing the assessed value of the home when they're looking at comps for selling the home, right?
I would say that, but I would also argue that there are some websites that are automated that might reference some of these
Oh, you mean like the Zillows of the world that are using
I
AVMs?
wasn't saying it.
You might not be allowed to say it.
Yeah.
Tip of the tongue, I guess.
I like this question because as a real estate agent, I have done both ways in negotiating this, right? So if you were to come to me, Tyler, and go, hey, look, the tax appraisal is 800,000. You guys are asking for $1 million. Like, what's going on here? I go, you know what that means? It means you get to pay less in taxes. Isn't that great?
Yeah.
How awesome is that? Great, right? So this is actually a value add for you buying this home. On the flip side, I've gone and, hey, appraisal value is $800,000. You guys are $1 million. Like, you guys are overpriced. And then they're going, well, no, so you could go both ways, but in reality, from my experience, that appraised value means nothing.
Right. And that goes back to kind of how counties are establishing the value of your home when they do reestablish that assessed value is just it's not deep enough. Right. And also their point in time, the assessed value is always based on January 1st. So the further you get away from that, the less it means to home sale. But yeah, it doesn't impact that value at all. And to your point, Jeremy, it's actually beneficial to the next homeowner if those taxes are lower or the assessed value is lower.
Aaron says he bought a property for $290K in December. I got it valued at $350. Do I show them the closing docs? What will most likely happen?
Yeah, I mean, that's one of the more cut and dry ones, because what they'll do and what our partners will do is they'll ask for those docs, or they'll pull in those docs by just kind of scraping the web and say, hey, look, this person bought this home for this much money. If you're trying to establish the market value of the home, well, they've already done it for you. And so that happened to me a couple of years ago when I bought my home. Just reset to the price that I bought it for.
Good. That's good. I'm noticing you also obviously you talked about this, having not just the property tax protest, but it gives you the energy, you have home insurance, you have a couple other ancillary services. So it seems like this could be a pretty big benefit for a lot of people. Would you say that you've had more success than not working with people?
Yeah, I mean, I think that's one of the major differentiators of Abode versus whether you're selling just home insurance or just doing property taxes or just energy, is that we're kind of a horizontal layer on top of home finance. And we do that by, again, being very good at extracting the data, but then also kind of finding partners where we can establish beneficial relationships with them, where it makes a lot of sense for them to take our business. And I think that the one thing that I'm most excited about is just creating a better user experience for homeowners. Right now, I think one of the reasons why people don't review their home insurance every single year is because it's a pretty high friction process to go and fill out forms and talk to an insurance salesperson, probably potentially get the runaround, and really not be informed enough to make that decision, especially with insurance, which is a weighty decision. With us, we're the ones that are kind of saying, hey, we can extract this data really easily. We need a little bit of permission from you. And then we're going and doing all of that work on your behalf so that you can kind of review your insurance policy every single year. So it's a little bit of a behavioral shift on that one. But insurance costs, I mean, we're doing ads right now, and a lot of people are like, property taxes are one thing, but my insurance costs are going through the roof. And that's something that affects the industry right now. If you're not paying attention to your home and auto insurance, you might be soon, because it's increasing significantly right now.
Mm-hmm.
Yeah. I had a flat tire in my Tesla yesterday, Ian, and I had to call my guy, Paul State, and he's like, Eileen, I call Eileen, she's like, hey, it better be covered because we're paying X amount per year, which is ridiculous. And I'm like, yeah, Allstate, you got to send a tow truck. He's like, all right, gotcha. So
exactly.
That's Paul at Allstate, everyone. I call him Allstate.
Such a good name.
Yeah. All right, Ian, what other questions you got? And then we got to wrap up. It's already been 57 minutes on this.
I mean, real quick, Tyler, the last question I have that I think most people would want to ask anyway is, so your only fee, or the only time that someone has to pay, is basically out of the proceeds of what you earn, right? So there's no other hidden costs or anything like that to use your service?
That is correct.
Love it.
Yep.
That's such a powerful question and answer right there.
Yeah.
Real quick, I'll actually just pull up your the website link. Share screen. So this is the website for Abode. If you want to go in, put in your address and do all that. But you did say that you offer a lot of other services at Abode. So what are some of the other services that you get on here?
Right now, property tax is obviously a big one, home and auto insurance, and then utility costs and energy costs. And that can mean a couple different things, just given that energy means a lot. Where we want to go is we want to get into things like PMI, because there's a lot of unknown there, claims, that happens quite a bit in Texas, especially. And that's a tough process. Everything financial, and then maybe even a little bit of the home maintenance. I think on a home maintenance side, like what's most interesting to Abode is the price transparency. Because personally, if I wanted to resod my backyard, I have no idea if that costs $5,000 or $500. I think the price transparency component of maintenance is interesting. And we'll partner with other companies that are kind of being like more, they will come to your house and do home maintenance. But we want to be on everything home finance first, and then we'll start to branch out into these other services.
Yeah, I started putting similar services on my site, stuff like what's a paint cost calculator, just because you're right that it's all of those things. You don't want to go and find and research, not necessarily not your first time. Like you've got this house, you already have so much to deal with. You've got to move, you don't want to get all of these services. So then you normally, which I love, call your realtor and say, who do you have for this? Who do you have for this? Who do you have for this? So, but yeah, having us have the ability to say, you know what, I got you. It's on my website. We love that too. And then if you have questions, we want to be there to further support.
Yeah, and that's why one of our go-to-market and how we reach homeowners is through realtors, because that is kind of like the one trusted advisor, that and maybe your mortgage lender, the trusted advisor that you have that knows this stuff, right? But you guys also, you make money by selling houses, not by helping people manage their houses. And so right. You can be there for the first 3-6 months to help answer questions. But I imagine at some point, you got to let somebody go figure it out on their own. That can be assisted by just giving them something like Abode.
One question I have before we go, you said PMI, you help with PMI. What does that look like? Because I know a lot of people have PMI on their homes, right? So PMI is just the mortgage insurance. Is that something when the home gets to 80-20 that you go back in and help get removed? Like, how does that work?
Yeah, I mean, we don't offer this product yet, but it's one that I'm really excited about because it's a massive amount of savings and very few people know how it works, right? PMI can add anywhere from 50 to 100 bips on top of your rate, or 0.5% to 1% on top of your interest rate. And it's basically for conventional loans where you've put less than 20% down. You're mandated to have this private mortgage insurance. What nobody's going to tell you, because nobody's incentivized to tell you, is that you can roll off of PMI sooner than you're scheduled to if your home is appreciated, right? Because as soon as you eclipse that 80% LTV threshold, or you have more than 20% equity in your home, you can roll off of PMI and start saving on that 0.5% to 1%. But you need to revalue your home. And so if we Abode can get really good at knowing the value of your home, and there are tools out there that can already do that, then we can front the cost of an appraisal and say, oh, no, this home is worth now more than they purchased it for. And therefore loan balance stays the same, home value goes up. Now all of a sudden you're below that 80% threshold and you're eligible to roll off PMI. And then there's the headache of actually going and talking to your mortgage servicer to get that done. So where I want to go is basically doing all of that work for you, such that we're just getting your permission to go and kind of like front that cost. And do you want to save money? If the answer is yes, then we'll kind of handle that process from end to end. And that, given like you're paying a 0.5% to 1% on your loan over the course of potentially 5-10 years that we can remove for you, that's massive. That's tens of thousands of dollars.
That's awesome.
That's great.
That's awesome. That's good, because a lot of people ask me about PMI, and that's one thing I'd love. if you ever have PMI, it's always a great feeling when you don't have to pay PMI. Tyler, thanks, man. I appreciate you coming on. I put the link in the chat, in the comments or in the description. You'll get that. Ian's going to get a great link as well. So find his YouTube channel. I had Ian, one of our viewers that you toured with this weekend, shot me a text today and say, hey man, I love that you guys do this. I toured around with Ian this weekend. I was like, fantastic. Ian's the man. He smells funny, but he is the man.
Yeah. It was an off day.
Yeah.
Right.
All right, everybody. We'll see you next one.
Jeremy, Ian, thanks for having me. Appreciate it.
Thank you, Tyler. Appreciate y'all.